Hello, fellow humans, and welcome to the Bursting Bubbles. In this series, I want to explain you why I think it's so necessary to analyze small capitalization coins and why the big ones, like Bitcoin or Ethereum, might not be the safe haven that many investors think they are. But first of all, of course, a disclaimer. This is not financial advice. I'm not a financial advisor. Do your own research before you invest in anything. As always, I will leave the sources to the research that I have done for this video in the description down below. You can use it as a starting point for your own research. With this out of the way, if you enjoy this video, please like it and please subscribe to my channel. It really keeps me motivated and keeps me making new videos like this one. Also, if you have a different opinion than I have, or you agree with what I say, or you feel something is misinterpreted in my videos, please leave a comment down below. I'm happy to engage with you, discuss with you, and learn something new if necessary. So I'm very happy to start a discussion in the comment section down below. So then let's start today with Bitcoin. The reason why I do this video is that many people in my environment tell me all the time, like, oh, I don't worry so much about the Bitcoin or the cryptocurrency bubble bursting. I only invested in the large coins like Bitcoin or Ethereum. And they are kind of safe, so I at least will get my money back. I largely disagree with this opinion, and I will tell you exactly why. First of all, my first argument will be basically based on an historical example. So many of you may have heard of it, maybe some of you haven't. It's basically the dot-com bubble, it was called. It was in like 1998, 2000 time frame. Some of you were not maybe even born at this time. So I was born at the time. However, I was too young. I was like 16, 17, 18, maybe a little bit younger at the time. So I kind of remember something what happened during the time, but I had better things to do with the little money I had at the time. So I was not invested. So I was more an observer. And many of the things that I understand now comes through research of that time. One parallel you immediately see, the times were crazy. It was absolutely crazy. Here's one article that's of Vice. I will actually leave the link also in the description below. You can read it. It's very interesting and a little bit funny as well. That's a guy who actually sold advertisement space on his face so that .com companies, that he could get tattoos of these .com companies on his face. So times were absolutely crazy. A lot of people were making tons of money. Everybody was happy. Money came out of all areas. Everybody, you just had a .com domain and you were rich. That was the time at this time, until the bubble burst, and many people, actually most of the investors in the .com area lost their money. And in my opinion, the same will happen very, very soon in the crypto markets. I don't know when. It might be next week. It might be 5 years down the line, but it definitely will at some point happen. And what I want to do here is basically understand how we can be prepared for that and what are good decisions to make. This is not FUD. This is just facts. I don't say crypto will die completely. It won't. Crypto is here to stay. But not all of the crypto projects that are currently existing, and even many of the ones that are currently winners of the market, will not stay around or will be very tiny projects. And this we can actually see in the comparison to what happened in the .com era. So .com era was actually, the bubble started in like somewhere in 1998 when Netscape went public and immediately doubled its money on the first day of trading, which was like crazy at the time. It was absolutely crazy. I mean, today we're talking about making 100, 1,000 times your money. At this time, doubling your money was a crazy idea. And that happened actually with Netscape, and that boosted the bubble. And you see, this is actually the 7 biggest companies in January 1998 out of the .com area, where Netscape is the biggest at the time. Many of you may not have heard of the company at all. Many older people like me, boomers, might have heard about the company. It was actually a browser company at the time. So they developed browsers. It's not existing anymore, the company. It was, I think the name is now belongs to Yahoo. Yahoo down the list there. You will see it will grow to large dimensions. We can actually start it here. Actually, I will stop at a moment and I will tell you, you should check out the videos of Data is Beautiful. Very nice videos, very informative. I will leave also the link to this video in the description down below, so please watch it. There are also companies, as we here see, like Excite and Lycos. To be very honest, I remembered the name Lycos, but I had no idea what both of these companies were actually doing. Turns out they both were search engines like Google today. They're basically unheard of. I mean, they're both still existing. I checked them out. They're really still existing, but it's yeah, barely, let's say like that. That's actually the case with many of these companies. Let's go, let's move, let's check out the companies here. Okay, Amazon is coming, eBay is coming. They're all still existing, but most of these companies are not. Now we're coming closer actually to the date when the bubble burst. It was March of 2000. Here we are. And you see Yahoo was absolute king of the market. Everybody thought this company is too big to fail. If we invest in this, we definitely will be rich in the future. The truth is, it didn't happen. Google actually was only founded in 1998 and went public only 4 years after actually the bubble burst in 2004, and is now the biggest company. Nobody is, very little people are starting to search on Yahoo or any other search engine than Google. Google is the thing. At this time, nobody was really talking about Google. Google was a weird startup with like very techy founders. At the time when they were founded, they didn't even have a monetization strategy. Absolutely crazy idea that Google at the time, such a small and techy startup, could be one of the biggest companies in the world today. Nobody would have thought about it, but it happened. And most of the companies out of the list are non-existent anymore, or are fractions of what they were at the height of the .com bubble. And this is actually my first argument. The same thing might happen in the crypto bubble. I don't say it will 100%. There are quite substantial differences between the .com bubble and the crypto bubble, but there are also similarities. And I just say it's not, you should not believe that just because it's currently the biggest thing like Bitcoin or Ethereum, that it will be always the case. It might be in some years that Bitcoin is just a tiny, tiny, tiny fraction of what it was today. The same with Ethereum and many other cryptocurrencies. Many of them will disappear altogether, and some of them will grow immensely. That's why I say this is not fact, this is just facts. A lot of people will lose a lot of money when the crypto bubble bursts, but there will be a few people who will make an absolute absurd amount of money in the making, like early investors, for example, in Google or Amazon or eBay. We're people who get crazy, filthy rich through investing in the right project at the right time. And many people who lost everything because they risk everything only on hype. Because that's the thing. All of these companies died because the hype was over. What mattered after the hype was utility, how well the search engine was working. And Google was absolutely ahead of the market. They didn't ride the wave during the .com bubble, but they built absolute superior technology. And this is actually where they succeeded and where they gained the market that they did until now. And this is actually what I want to say. It's not about the hype. Look at the technology, because after the bubble bursts, the only thing left will be the technology and the utility of the crypto project that they're existing. And this is what I want to do actually in this channel to look at that. So this is my first argument why Bitcoin might not be the safe haven that you think it might be. The second argument is actually based on the technology of Bitcoin. So what will be immensely important when we look at mass application of Bitcoin, so when we want to actually move to like a huge amount of people using a cryptocurrency, is scalability. And that's a major downside of Bitcoin. So when we, for example, here's an article also in the description below, of course. Here's actually an article about how Bitcoin compares to Visa-like transactions. And there we see already a huge problem. Bitcoin is currently capable of maximum 4.6 transactions per second, where Visa is doing 1,700 transactions per second. That means if you want to scale Bitcoin on the size of Visa, it would just not be possible. You would wait hours for a transaction of yours to go through. It just would not make sense at all. And the reason, one of the reasons for this is actually based on the POW, so the proof of work algorithm that Bitcoin is using. It's actually working like this, just a short explanation. It collects within a time frame of 10 minutes all transactions that were made, and then it writes it in a block, and this block is mined, right? That's another downside. It's very high energy consumption, high investment into hardware that is required for mining currently, which is absolutely unscalable. We're already at the border. Many countries like China already close Bitcoin mining because it has such an immense energy consumption. That's not scalable. And then additionally, you have the problem with the 10 minutes increment, 10 minutes increment. So again, here we have the 10 minutes. Sorry for my handwriting, I'm with the mouse, so it's horrible. I hope you understand what I mean. So it's always 10 minutes, collection of transaction, and then mining the block, again, 10 minutes collection. And that means, of course, that there's a long time until actually your transaction can be even put through. It's not just the amount of transaction you can do, but it can also take up to 10 minutes until your transaction is actually acknowledged within the blockchain, which is, of course, doesn't make sense. If you stay in the shop with your credit card and you want to pay, you cannot wait 10 minutes until your transaction goes through. It's just not doable. And this is one major downside of Bitcoin, that it's just not scalable enough to have mass adoption. Another problem that connects to this is that Bitcoin is actually a plus of Bitcoin usually, but it has also its downside, that it's hugely democratic. Actually, to introduce changes to Bitcoin, so it was tried already several times to make Bitcoin more energy efficient, faster, better, introduce smart contracts. Many things were actually tried to do within the Bitcoin environment. However, to be actually introduced as a change to the core algorithm of Bitcoin, all of the nodes, everybody within the Bitcoin environment has to agree upon that, has to download the new version of Bitcoin. If this is not happening, then actually a hard fork is happening, which in most of the cases, when larger changes to the core algorithm of Bitcoin actually were introduced, it led to a hard fork. Like, for example, Bitcoin Cash, a Lightning Network, one of the forks of Bitcoin, actually the fork of Bitcoin Cash, eCash, I was talking about. I will leave the link to the video here up in the corner. So watch that video where I also explain a little bit more in detail what are the problems actually with Bitcoin and how eCash can solve some of these problems. eCash is actually one of the coins I see good potential that could be a replacement for Bitcoin, but there are many others around. Yeah, and this is actually what I see. I think that Bitcoin-related coins, so based on the Bitcoin technology, will be still around for a very long time. They're here to stay because many applications, many payment applications are already built on Bitcoin technology, so this will stay. However, as I said, there are many forks of Bitcoin, and they actually can be as a replacement for Bitcoin in that case, and can use all of the technology that already exists, but having a better, a faster algorithm running in the back. And that's the main problem. That usually when you want to introduce improvements to the Bitcoin technology, to the Bitcoin algorithm, it ends in a hard fork. Many of these hard forks have already happened, and these usually result in separate coins. So that means investing in Bitcoin likely means that you invest in a legacy technology, whereas Bitcoin-related coins that are hard forks of Bitcoin, or hard forks of Bitcoin, or so on, they still have all the benefits of Bitcoin, but they might run on better, faster, more modern technology. That's why it's worth looking at these hard forks, these Bitcoin-related tokens and coins, because they might run on much more stable, much better technology than Bitcoin itself. This is actually my second and actually biggest reason why I think investing in Bitcoin is not such a good idea. First of all, you're investing in legacy technology that most likely will not change, because there has to be an overall agreement between all parties, and often decisions that would make the Bitcoin faster or more efficient go against miners. And the miners in the Bitcoin network have an immense amount of power, and usually will not agree to anything that will reduce their margin, so the money they make from Bitcoin mining. And this is, I think, one of the downsides there, that improvements towards efficiency, speed, things like this, will likely not happen on Bitcoin itself, but in one of its forks. So if you want to invest in Bitcoin related, in the Bitcoin environment, it might be a wise thing to not just look at Bitcoin, but to look at all of the different forks. As I said, I analyzed some of them here, where eCash, I think, is one of the major candidates that might survive, that has very interesting technology. But there are also others around that are faster, that are more scalable than Bitcoin. So it might be a very good idea for you to look at these instead of thinking that Bitcoin is a safe haven, which in my opinion, it isn't. But with this said, if you like the video, please leave a like here, subscribe to the channel. If you disagree with me, please start a discussion in the comments below. I'm more than happy to engage with you. So, and then see you next time. Bye.